of limited company. The first type is public limited, which is issue the share offer from the public to the public, and then I gather all the monies and help up for the company's capitals. And second one is a private limited company, share only for, within the families and the friends. The point of view of the individual and the business when they are in the public or the private limited companies. So from the point of view of the individual, the liability for the debts is limited. So to the members that agree to contribute. So this one, they are safe. They are not like previous chapter, the partnership. Once you join a partnership, if one of the partner run away, you have to cover all his debt that involved in the companies, the partnership company. But here, how much you buy the share, how much you bear the losses, that's it. Okay, so it won't involve in your personal asset. So separate legal entity to the shareholders. So the legal action taken is against the company, not the shareholder. So if let's say the public limited company having a huge liability or huge debt, so nobody will sue the shareholder, but they will against the company. So usually a board of director will be appointed to run the business lah, the day-to-day business. If the share are held in the public limited company, it is easy to buy and sell the share. So the above 4 point is involved with the private limited and the public limited. And the last point we are saying that what if you are like Genting Holdings company, you can issue share to the public and you can as a shareholder, I can easily buy or sell. Okay, from the point of view of the business, if I am private limited or the public limited companies, what is the benefit or the things that I need to take care? So it is possible to access the greater capital, means that I have huge capital to run my business instead of the sole trader. I only have some of the limited amount that I have or I available. Okay, loan can be easily get it compared to others company, as in they have transparency of their income statement and SOFP. It's easy to trace their income and easy to refer, as well as they have a huge what's that called, the number of the shareholder. Okay, has continue of existence, means that they can foresee, people can foresee that you are continuous for the long term business instead of a short term business managing. Okay, so however there are many legal requirements you have to take care. Like let's say you are private limited company, the Sdn Bhd, you have to pay for the audit every year, so you have to follow. You cannot just because I want to save the money, so I won't do the auditing section or auditing part. So you must do, because this is under the government's law. Okay, annual and also you need to promise to show your income statement and SOFP for your shareholder to be transparent. Okay, so annual financial statement must be prepared so that your shareholder will understand and know what is going on to your business, and is this business doing well, or should I continue act as a shareholder here, or should I sell my share? Okay, share capitals. We discussed about this share capital here. So what type of share capital they have? So issue capital is the amount that the limited company that issue to the public or to the shareholder. So capital required to be issued to the shareholder. Called up capital is the total amount that already issued and requested by the limited company to pay. So it means that I am the limited company, I call the shareholder, you have to prepare this amount, it's time to pay, as you already promised to pay since you already bought. Okay, so pay up capital is once I call up, then this is the final part that I collected from the shareholder, the money that I actually collected from the shareholder. Okay, way to raise fund. So there are three ways to raise funds for your limited company. It could be either I issue the preference share, ordinary share, or the debenture. So there are three different features here. Debenture as in is treated as a loan. So long-term loan carry a fixed interest rate that I promise to pay to the debenture holder. So and the interest payable whether or not the company making profit, if their company is not making profit but you still have to pay this promise debenture interest. So interest appear as a finance cost in your profit and loss section under the IS. And if a company is wound up, means that closed down or bankruptcy, the debenture holder will be repaired before any capitals is repaired to the shareholder. So it means that always debenture repayment first, then only the remaining monies after that I pay for the current liability, trade payable holder, trade payables, and then only comes to my shareholder. So debenture holder are not members of the company, so therefore they do not have voting power in their company's meetings. Okay, so next will be preference share. Preference share, they have two types: redeemable preference share or the non-redeemable preference share. So